Okay, for this day's session from me, I'm going to cover off objection handling, the bane of all advisors' lives. Now, for me, I categorize these into two sections. There's the objections that happen early on, and I call them just excuses. It's where the customer's trying to get out of even discussing protection in the first place. And then there's the objections that come after we've made our recommendations, the typical ones we've all heard. So, splitting it up into two halves, let's take care of excuses first of all, please. Let's have a question.
Hi, Gary. How do you respond to a client that says, I don't want to discuss protection right now. It's not a priority for me?
Okay, this is a very common one. Now, to be fair to the customers, they don't really know the importance of protection and they're trying to get out of you discussing it with them early on. Now, it's important to remember, it's not their interview. It's your interview. You're driving the bus on this one. They're just passengers. So you need to take charge of it, take control and set your stall out early. Now, in this example, I'm going to pretend I'm a mortgage advisor. So, Mr. Customer, my advice comes in two separate but equally important halves. We'll be discussing the mortgage and your protection needs. So you've made them aware of what's going to happen. If they still throw in a typical excuse like this, it's very easy. We have consumer duty on all of our sides. This isn't a stick to beat us with. This is one of the best sales tools we could have had. So if they say, we don't discuss it yet, say, oh, I understand, but under the new consumer duty rules, I do need to make you aware of what protection you need as well as the rest of my advice. Now, you haven't got to act on all of my protection advice, but it's vitally important that you hear it. By doing that, we're keeping protection alive at this very early stage. You don't want to start going in and trying to disturb the customer. They will throw their barriers up immediately. All we're doing is keeping it on the table so we can present and disturb correctly later on when we know all the facts.
What do I do if a customer tells me they already have cover in place or they have good cover through work?
Right, this one throws many advisors straight off the path and generally buckle and don't get to a protection advice. Now, the most common thing we've been taught in the industry, and I hear this all the time, is to challenge the customer by saying something like, well, your protection might be out of date, or with your work's protection, you are working with an employer, and if you change employers, maybe the cover will stop, and then one day, perhaps, possibly, maybe, if you get another employer, they won't offer the same benefits, blah, 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 blah. Oh my God, that's such combative, confrontational conversation. You might as well say, please, 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 let me try and sell you some insurance later on. Just calm down, there's plenty of time. This is the start of the interview. Chill out. All we're going to do is flip it on his head and put it in a positive manner. So I have a system called TOP. So T, you thank them or congratulate them on what they've just said. They won't be expecting that. O, obtain the details, get the information on. They're keen to tell you about it. Let's find out what it is. And then use it for P to position that the protection appointment is definitely happening. So an example, we don't need to discuss anything with you. I've got awesome cover with work. That is fantastic news. Can you get me all the details? Because I'll have a good look at it. And if I can use that in the protection appointment, we could save you a load of money. I'm so glad you told me. Now then, their objection's been turned on its head. They'll be happy to bring in the information because they think you're going to use it or they know you're going to pay attention to it. And guess what? You've just positioned the protection appointment without any pushback from the customer at all. Easy.
I struggle to get customers to buy into their protection needs on product transfers and remortgages. How do you overcome this?
Right, this is a common problem again. All right, so product transfers and remortgages. This is a problem with the psychology of both the customer and in most cases, the advisor as well. With a PT, when I'm listening to calls about PTs, they typically take between 9 and 14 minutes. It's here's a rate. Do you want this rate? Do you want 2 or 5 years? Bang, there you go. See you in a couple of years' time. So that is the advisor and the customer who have never done a PT with a protection review. We have consumer duty rules again now. A PT isn't a quick paper exercise. It's a regulated, advised process, just the same as a remortgage and just the same as a new mortgage application. If you don't go through the protection properly, and something happens to that customer, guess what? You touched the ball last. It's coming back on you. So you have a duty of care to the customer and to yourself and your career to do this properly. Once again, manage expectations from the start. Tell them straight away, under the new rules, my advice comes in two separate but equally important halves. You set the stall out that you will be discussing protection with them. Now, either they didn't do this with you last time or they didn't do it with the last advisor. So you might get pushback. But once again, you can just say it quite sympathetically. Actually, I have to go through this with you. My name goes on this application just the same as yours. And I need to know that I can look you in the eye and know that I've given you the best advice possible. So we do need to do it in this two-half process. They won't push back. They will listen to what you say. You're the expert and they've paid for your advice. All right, so if there's no more questions around the first half, the excuses part of the process, let's move on to the objection handling, i.e. making sure we can overcome objections after we've given our advice. So let's go back for the next question.
If a customer has good sick pay already, such as doctors, how do we get them to see the need? Okay, so firstly, good sick pay. When we think of good sick pay, I've heard advisors saying, I couldn't sell IP because they already got good sick pay. People with 6 months full and 6 months half haven't got good sick pay. It's just a little bit less crap than everybody else's. It's not good. If they got a 6-month mortgage or 6 months to retirement, it's really good. But let's be honest, who of our customers have got 6 months to go before retirement? So they've all got a shortfall. So the customer thinks it's good, and if we think it's good, that business is going down the toilet because the energy between the two of you is weak and lackluster, and you won't get business out of it. So remember, if someone's got 35 years to go to retirement or for the end of their mortgage, that's 420 months they've got to pay the mortgage, pay the bills, pay the pension, pay everything. 420 months. And they've only got enough sick pay for 6. That's 414 months that they couldn't pay their mortgage and bills. That's a massive shortfall. So instead of focusing on how much sick pay they have got, tell them how much sick pay they haven't got. If you're looking at 420 months and only 6 months sick pay, I don't care who you are, that looks like a very big shortfall. Then focus on the cost they're saving by saying, because you got free cover, it's going to save you a load of money. Who doesn't want to save money? When you do quotes for these advisors, let's say a doctor. So you're going 6 months full, 6 months half, and you're doing an IP. When you do the quote, also do a quote for a 1 month deferred period. Why? Well, I'll show you. So when you give the quote to the customer, say, actually, because I'm going to use your free cover with work, it has saved you a load of money. Most people your age and your income with less sick pay would be paying £238.50 a month. Because I'm using your free cover, it's brought it right down to £127 a month. You are saving a load of money. It's called price anchoring. It's been around for decades. Tell them how much everybody else is paying, tell them how much they're paying, and that looks much, much cheaper. So there's 2 tips to make sure that you never have a problem advising to people with good sick pay again.
What if you're advising a family and they don't see the need either because of cost or because it's not a priority for them?
Right, that's a great family question. Okay, so let's go back a little bit. If they're not buying into these needs and a family, then probably the way you're presenting the advice isn't quite right. The most common thing I hear advisors doing is something like this. Let's say it's decrease in term assurance. Right, Mr. and Mrs. Customer, you've taken out a mortgage for £210,000 over the next 35 years. So decrease in term assurance will decrease with the amount you owe, which makes it cheaper. And if either you pass away over the term of the mortgage, it will clear the mortgage, as long as the rates don't go up by more than 8%, etc. That will cost you £29.38 a month. How does that sound? Nod to yourselves if that sounds a little bit like someone you know or you know, right? That is transactional. That is an insurance quote. You haven't sold anything to the customer's heart. It's all maths, head up there. They're a family. They can have children. They can have dependents. It's a family. I call it selling to the heart. Let's get them buying from here, not up here. So instead of making it transactional there, which is just maths, right? When you're positioning it, bring in children's names. When you're doing the fact find out what their goals are, what their hopes are. If you ask someone about their children, they will not stop talking about them. It's the most important thing in anyone's lives. Their goals, their hopes, their ambitions. Now, when you're providing your protection device as a solution to these problems, and you're bringing in the children's names and details of their plans and goals, well, you're providing a solution for a problem they didn't even know they had, not an insurance quote. I'll use an example. Let's stick with DTA because it's simple. This DTA will clear the whole mortgage should either of you pass away. What this means to you is if either of you die, the surviving partner and Adam and Olivia will have a mortgage-free house. They'll have a roof over their heads, and your children will always be safe and they'll always have a home. You present advice like that, then the cost will not be as important because it's meaning something to here, not to here. Secondly, if that isn't going to work or you want to add even more weight to it, show them their outgoings, right? So if they've transfixed, well, I got the vet bills, we got Katie's skating lessons, I got the food, I got the car insurance, yada, 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 yada. We've all got them, we're all busy. Show them that. Then you add in the cost, in this case, let's say of an IP or a family income benefit at the bottom. So show them it's affordable. It's still within the outgoings range. Then you tell them, out of all these outgoings, if you're off sick for more than 3 months, all of these outgoings, all of these important numbers will immediately become a problem because all of them will require payment and you will have no money to pay them. Except one of them, income protection. Not only will it pay for itself, but it'll pay for every other item. Katie's skating lessons, Fido's vet bills, etc., etc., etc. So when you think about it, Mr. Customer, it's the most important outgoing you'll ever have. Because without it, nothing else gets paid. You show them that will get an IP or a FIB or a life or anything. So just take your time, stop quoting insurance, provide solutions.
How do you respond to a client that says, we're fine, we don't need it right now, particularly when it comes to income protection and critical illness?
When you're with a customer, when they say, can we ever think about it? Or it sounds think, but can we leave it for now? You can normally gauge if the customer's actually trying to get out of doing it by being polite and using a soft no to get out of their awkward situation, or if they actually genuinely do want to think about it. So you've got to use your own sort of professional intuition on those situations. However, if they say, can we ever think about it? Can we let you know? And you let them leave, once they get back into the outside world, the power of the words in your advice has got such a rapidly diminishing meaning in their lives. So I really want to try and avoid doing that. When customers say, no, we don't need it, we'll be fine. First of all, change how you present your advice. Like in the example I just gave, you need to sell to the heart, not the head. And that'll stop that happening. But this is Narnia, that's still going to happen. So if they say either of those things, they are going to leave your care. You've given them the debt or you've given them the financial advice on the investment advice and you haven't protected it. And if they go, we all know, they are not going to come back or it's very unlikely. So in this particular case, I use what I call the betting shop close. It's probably the most direct technique I coach. But bear in mind, they're going without protection. And if you don't get them back in, that's the end of it. You've just rolled the dice on their lives. So the betting shop close is basically, let's say the customer says, we don't need the IP, I've never been off sick, I'll be fine. Right, are you absolutely sure you want to make that decision? Because not having income protection is like walking into a betting shop every single day and gambling your financial security and that of your families every single day that you will never be off sick for the next 35 to 40 years. You've only got to get it wrong on one of those days to get into financial disaster. So I'm going to give you a second chance to make the right decision. Are you absolutely sure you want to decline my advice? All right, so it's getting them back in and it's painting a picture. The psychology behind it is, if they say I don't want it, usually it's because it's money. They're thinking maths, they're thinking here again. But by painting the picture that they're gambling their home every single day, which they are, because you don't know when they're going to be off sick, suddenly it's gambling something that their family live in rather than thinking of a number. So it's highly effective. You got to get comfortable with saying it, but you will protect more customers and lose a lot less business.
What if they say, can we have a think about it?
Okay, so there's two types of can we ever think about it. There's the one that means genuinely, can we ever think about it? And there's the other one which means we don't want it, but we're embarrassed to say it. Can we ever think about it? We'll get back to you.